There's a massive shift unfolding beneath the surface of global finance. You can feel it, the quiet tremors under the noise. Inflation is high, liquidity is tightening, and trust, the most valuable currency of all, is fading. For decades, money has been moving through an aging skeleton of systems. Swift messages, nostro and vostro accounts, layers of intermediaries that charge rent for every transaction. It's the architecture of the 1970s, patched for a digital world that's long outgrown it. But now, the foundation itself is being rebuilt, not by central banks or politicians, but by engineers, visionaries, and coders. The kind who saw that value, like information, could travel at the speed of light. And at the center of this new infrastructure is Ripple, and its native asset, XRP. The story didn't start with crypto hype or overnight riches. It began in 2004, when a software developer named Ryan Fugger in Vancouver asked a simple question. What if communities could create credit without banks? He called it RipplePay, a peer-to-peer trust network. Years later, as blockchain ideas took root, a group of builders, Jed McCaleb, Chris Larson, and David Schwartz, expanded that vision. They wanted a system that didn't waste energy mining blocks, didn't depend on intermediaries, and didn't take days to settle. A digital asset that could move across borders as easily as an email. They built it, the XRP Ledger, fast, efficient, borderless. Every few seconds, a new ledger closed, reaching global consensus without mining, without delay. When the company rebranded as Ripple Labs, it wasn't trying to launch the next currency. It was designing the rails for all currencies, a neutral bridge connecting banks, payment providers, and currencies on one seamless network. By 2018, Ripple's vision had begun to take shape. Corridors opened between Mexico and the Philippines, moving remittances in seconds. Fees dropped from $30 to a few cents. Cross-border transfers that once took days now cleared before you could refresh a screen. But change threatens power. And in late 2020, the SEC filed a lawsuit against Ripple, alleging that its sales of XRP were unregistered securities. The shockwaves were immediate. Exchanges delisted the token. Market liquidity evaporated. Confidence wavered. For many, that would have been the end. But Ripple fought back, not through hype, but through evidence. They argued XRP was a digital asset with a real function, powering payments, not promising profits. They pointed to its decentralized validator network, its live use cases, and its transparent ledger. In July 2023, Judge Annalisa Torres issued a ruling that would reshape the industry. She declared that XRP is not a security when sold on public exchanges. The message was clear. Not every token is a stock. For Ripple, it was vindication. For crypto, a legal turning point. That decision became the first real precedent in US history, distinguishing digital assets from securities. Banks took notice. Regulators recalibrated. And while the SEC reserved the right to appeal certain elements, the tide had shifted. XRP wasn't a theory anymore. It was legal infrastructure. Fast forward to 2025. Regulation is finally catching up to innovation. Two pieces of legislation, the Clarity Act and the Genius Act, are setting the new legal foundation for the digital economy. The Clarity Act defines what a digital commodity is, giving the CFTC jurisdiction over assets that are decentralized and functional rather than speculative securities. It establishes exactly what Ripple argued for, that tokens with established utility, operating on open networks, shouldn't be treated like corporate shares. The Genius Act, meanwhile, governs stablecoins and tokenized deposits, setting standards for reserves, audits, and how these assets can circulate within banks and fintech platforms. Together, these laws draw the map for how digital value will move: compliant, transparent, interoperable. And this is where Ripple's architecture fits perfectly. It was built for this world, long before the rules existed to describe it. While the industry chased hype cycles, Ripple was wiring corridors. Now it's wiring the corporate world. In October 2025, Ripple acquired GTreasury, a billion-dollar treasury management platform serving over 1,000 multinational firms in more than 160 countries. This isn't just a software acquisition, it's an entry point into the beating heart of global liquidity. Corporations manage trillions in short-term cash, FX exposure, and tokenized assets. GTreasury connects directly to their systems, and now, through Ripple, to blockchain rails. It's the convergence of traditional treasury management and decentralized liquidity. The implication? Ripple isn't merely helping banks move money, it's embedding crypto infrastructure into the core of corporate finance. When you connect that to ISO 20022 compliance, the new global messaging standard for payments, the result is a unified architecture for real-time settlement, the kind of system every major institution has been waiting for, one that satisfies both compliance and efficiency. Meanwhile, Ripple continues building quietly, expanding on-demand liquidity corridors in Asia and the Middle East, partnering with central banks on CBDC pilots in Bhutan, Palau, and beyond, developing new XRPL features like automated market makers, tokenized assets, and sidechains. Each step deepens the rails, not through speculation, but through design. And those rails now align with the legal and institutional clarity emerging from Washington. The convergence is unmistakable. So what happens next? We move from crypto speculation to financial architecture, from traders chasing volatility to institutions optimizing liquidity, from the Internet of Information to the Internet of Value. This is the tokenized economy, where everything of value can exist, move, and settle on interoperable networks. Stocks, bonds, treasuries, carbon credits, real estate, all represented digitally, moving frictionlessly across borders. In this new system, XRP isn't just a token. It's a bridge asset, a neutral medium for settlement between all others. That's why its design matters. No mining, instant finality, ISO compliance, global interoperability. These aren't buzzwords, they're engineering choices that align perfectly with what the world's financial institutions now require. For months, skeptics claimed XRP's time had passed, that banks would never use it, that SWIFT would choose Chainlink or another protocol. But behind the noise, tests have already begun. SWIFT's own pilot programs for cross-border tokenization reference ISO 2022 interoperability, a standard XRP natively meets. Financial institutions are exploring RippleNet integrations under new regulatory clarity. And with the GTreasury acquisition, Ripple now sits in direct partnership with the very corporations that move trillions daily. So when analysts say XRP could power global liquidity, they're no longer speaking hypothetically. They're describing an infrastructure that's live, legal, and expanding. Still, markets move in cycles. This isn't financial advice, and no one can predict the future. But patterns repeat. Before each major wave of institutional adoption, there's a quiet phase: disbelief, uncertainty, accumulation. If history rhymes, this could be that phase again. A moment where legal clarity and infrastructure collide just before utility-driven valuation takes hold, where price still lags reality, and where the smart money, the ones who see architecture before hype, position themselves early, because once global liquidity moves through these rails, price won't be decided by sentiment. It'll be decided by throughput. by demand for settlement itself. That's the difference between speculation and transformation. Ripple is no longer a startup. It's a keystone in the evolving architecture of money. From Ryan Fugger's community credit vision in 2004, to the courtroom battles of the 2020s, to the corridors now connecting continents, this is a 20-year overnight success. The lawsuit is over. Regulation is catching up. Institutions are coming online. And the rails are already humming beneath the surface. This is the era of utility, where value moves like data, where finance becomes frictionless, and where XRP stands as the bridge between worlds. The question isn't whether it will happen, it's whether you'll notice before everyone else does. This isn't the next crypto cycle. It's the next monetary system. And it's already happening.